A stock dive on Wall Street today. The S&P 500 suffering its worst one-day decline in 3 months, losing more than 37 points. The Nasdaq also falling 74, while the Dow lost 331 points. And we can blame it mostly on those plunging oil prices. We're talking about this tonight with Certified Financial Planner and Fox 35 regular Joe Bert with the Certified Financial Group. Two big questions for you, Joe. First, why did the stocks take such a dive today?
Well, Sonny, it was a confluence of events. It was certainly the oil prices touching $50 a barrel, dropping to a 5.5-year low. And then there's some concern about what's going on in Greece, electing a new government, maybe dropping out of the euro, and maybe defaulting on their debt. So those two things, plus one more thing. You couple that with the record that we've had in the markets over the last several months, and it was time for a bit of a correction.
Okay, so how does it affect investors not only in the short term but also in the long term, Joe?
Well, certainly if you take a look at your account tomorrow morning, your IRA, your 401k, or just your regular stock portfolio, you're going to see a drop. That's if you're invested entirely in stocks. But the opposite side of that, if you've owned some bonds have gone up today because people are running out of stocks and going into bonds.
Okay, so I know this was two big questions, but I'm going to say 2A here. Sure. Any advice you have for anyone who feels a little jittery after checking their investments?
What we want to remember is that when you're investing, it's long term. You know, we always get the reports every day on what's going on in the market, and we kind of judge how we're feeling, particularly if you're in the stock or the bond market. But you really want to remember that investing is long term. I think this is a short term blip because people are going to come back to stocks because where are you going to put your money today? You're not going to put it in the bank and earn nothing. You're not going to lend it to the government for 10 years at 2.5%. It's going to come back into stocks. May take a little bit, but I wouldn't panic.
All right, Joe Bert with the Certified Financial Group. Thank you.
You're welcome, sir.